Hi, welcome to our channel of IGNOU Audiobooks. Indira Gandhi National Open University, School of Continuing Education, Certificate Programs, Certificate in Apparel Merchandising, CAPMER, BHC05 Basics of Apparel Industry and Entrepreneurship, Block 5, Unit-22, Business Plan Preparation and Analysis. 22.0, Objectives. In the previous unit you have learnt about the identification and selection of business opportunities. The final step in the process is that of preparing a business plan, which will be dealt in detail in this unit, after going through which you shall be able to understand the concept of business plan, describe the objectives of business plan, outline the benefits of business plan, describe the contents of business plan, understand how to make the presentation of business plan to investors, discuss the ways to approach the right kind of investors, and understand how to convince the investor to make investments in the new venture. 22.1, Introduction. In the previous unit of this block we have discussed that the most important task of an entrepreneur is to select right business opportunity that suits best to his or her skills and resources. Once the task of business opportunity selection is done, the next step is to think how to execute that business opportunity and from where are we going to fetch the finances to fund the new venture and run its operations successfully and effectively. In this unit we will discuss all these issues. Here we will talk about the contents of business plan preparation and presentation. There is a popular saying that entrepreneurs do not plan to fail, but they merely fail to plan. Every new venture needs funds to be established and operate the business successfully. Without business plan, an entrepreneur usually cannot get funding. It does not mean that businesses that have enough cash do not require business plan. Even they can get into big trouble if they don't prepare a well thought out and well designed business plan. This serves as a roadmap or guide for the entrepreneurs who are planning to launch a new venture, launch a new product or service, or introduce a new marketing program to grab business opportunities that are provided by the environment. It is important to note here that a business plan is important even when the companies want to go out of business. Companies need a business plan if they want to merge with another business or if they want to put themselves up for buyouts. Now let us discuss these aspects in detail one by one. 22.2, The Business Plan. A business plan is a roadmap for the business. A business plan is a written document that portrays how a business will be successful in obtaining their goals. A business plan is a document that exhibits that the proposed business has a promising market and it is financially viable and technically feasible. Business plan is not only prepared for setting up a new enterprise, it is sometimes prepared by the established business enterprises also if they wish to make a move to new direction. The plan includes the budget, current and estimated financing, market, technical and financial analysis, and projected revenues and costs related to the business. We will discuss in detail the content of the business plan later in the coming sections and subsections of this unit. The business plan enables the entrepreneur to have a clear picture of the probable costs and benefit analysis. This also shows the entrepreneurs the anticipated problems and hurdles with the thought-out business ideas and helps them in finding out the solution. As per Adam Hayes, a business plan is a written document that describes in detail a company's core business activities, its objectives, and how it is to go about achieving its goals. A business plan lays out a written roadmap for the firm from each of a marketing, financial, and operational standpoint. Although business plans are especially useful for a startup company, every company should have a business plan which should be reviewed and updated periodically. This helps to see if goals have been met or have changed and evolved. It also portrays the firm's policies and strategies to combat the probable issues. In a nutshell, it is a resume that is used to introduce the business to the suppliers, vendors, investors, and others. Thus we can see that business plan is a reality check for a new idea to be converted into a business enterprise, a document used for getting funds for a business, a strategic plan to launch a new product or service, a financial forecast of the future, a strategic plan that depicts the feasibility, viability, and profitability of the business, a marketing plan showing the prospects and threats of the business, a detailed analysis of the customers and assessment of the competitive environment. A written document of the vision and mission of the business enterprise. A blueprint that can be used to focus on the strengths and weaknesses of the business. A roadmap for achieving the goals and objectives of the business. An analysis of the entire industry including opportunities and threats. A description of the business model and much more. Business plan objectives. Once you decide to write a business plan, the very first thing you should do is to plan your draft. Because, as an entrepreneur, you are accountable for the content, projections and proposals of your business plan. It becomes even more important to plan your business plan effectively if you intend to raise finance from the investors. Hence, you should think twice what you are writing in your business plan. To plan your business plan, the first thing you should decide is the goals and objectives of your business idea. Setting objectives are important as it gives direction and motivation. Therefore, it is very important to set objectives if you are planning to start any new task. While setting objectives or goals, you should adequately satisfy the SMART principle. SMART here means specific, measurable, attainable, realistic and time-linked. The objective should be very clear and should not be vague. You should make sure that the objectives that you have set can be measured. Setting too high objectives or goals often tend to bring negative results. Achievable objectives should be time-linked. The date of completion should be well defined. While setting objectives of a business, you should ask few questions to yourself such as where do you want to be 5 years down the line? What size you wish your business should grow? Etc. An answer to such questions helps you to frame your business plan objectives. Benefits of business planning. Business planning provides many benefits for your business venture. The benefits can be summarized as under. Business planning compels you to consider essential goals and policies. This helps in creating a conducive environment for starting a new enterprise. This helps in recognizing and anticipating the problems that might come into the way of your new venture. This provides you the facts to see and anticipate the future much closer to the reality. This shows the feasibility, viability and profitability of the business, which increases your motivation as an entrepreneur. This gives confidence to all the stakeholders of your business such as suppliers, vendors and lenders, investors, customers and the employees. This determines in advance the capital requirement with the growth of your business. As an entrepreneur, you can make an advance planning to fetch capital in time to the business. Barriers to business planning. It is imperative to make a business plan as a budding entrepreneur or as an established entrepreneur intending to make new moves in the business. Still, there have been instances when entrepreneurs fail to prepare and develop business plans as a strong tool. There are certain barriers that discourage proper business planning. Let us discuss those barriers quickly. 1. Lack of knowledge of starting a business. When there is lack of knowledge of how to start a business, people tend to jump into the market blindly without actually making a proper business plan. This quite often results in startup failures of the new enterprise. 2. Lack of knowledge of market conditions. This is one of the barriers to effective planning. When people do not have proper knowledge about the current market conditions, they often fail to prepare plans. 3. Involves cost. If entrepreneurs do not have the skill and knowledge to prepare business plan, they have to get it prepared by the consultant. This will involve consultancy fees, which of course is a cost burden. To avoid this cost burden, sometimes small business owners do not get business plan prepared. 4. Fear of failure. Sometimes people are phobic to the uncertainties. Because of fear, they ignore future planning and keep on focusing solely on their day-to-day operations. 5. Short-sightedness. Few people are short-sighted. They focus on their current projects and do not focus on broader long-term goals. Thus, short-sightedness is a big barrier to effective business plan. 6. Lack of positive ideas for the future. Few people lack positive ideas. They tend to brood on the probable negative results and are conservative in their thoughts. This attitude is also a barrier to business plan preparation. 7. Lack of creativity. Lack of creativity also poses hurdles in business plan preparation. Inability to think is the biggest threat. Check your progress. 1. Give meaning of a business plan. 2. List out the objectives of business plan. 3. Enumerate the benefits of business plan. 22.3. Outline of a business plan. Considering the efforts that are taken in developing a business plan, it becomes even more important to give a thoughtful consideration to structure it and present it in an effective professional manner. Adequate time and efforts should be dedicated to prepare it. This means, if you are an entrepreneur or a budding entrepreneur, it is very important to outline your business plan carefully after considering all the possible variables. You should sit and discuss with your mentors, business partners and colleagues about your plan and seek their observations and suggestions. This discussion is way too important. The next important thing is to see for whom are you preparing this business plan? Whether it is for investors, partners or for your own self. A business plan for investors should be as detailed as it can be. If the plan is for business partner, it need not to be as detailed. It should focus on goals, mission and vision and of course the partner's interest. The outline of business plan also depends upon the nature of the product and or services. Business plan for a product or service which is complex in nature may have to be lengthy in comparison to the product or services which are very simple. For instance, business plan for a beauty parlor will be entirely different from that of a manufacturing venture. Although the structure of the business plan may vary from business to business, there are some components which are part of all kinds of business proposals invariably. Let us discuss those broad components. The broad components for creating any kind of business plan are as follows: mission and vision statement, description of the enterprise and its product and services, market analysis, description of the team members, marketing plan, SWOT analysis, cost and revenue projections. Summary. As discussed earlier, the business plan is not only important for new businesses seeking funds, it is also important for already established ventures longing for moving in new directions. Business plan for these two different purposes have to be tailor-made. Business plan for creating a new enterprise. When you are going to develop a business plan for a startup venture, creating a new enterprise, you need to be very careful, as it will decide the fate of the venture. Many new businesses fail at the early stage because of wrong projections of business plan. Therefore, you should be very careful while drafting a business plan for startup venture. You should ask several questions to yourself before starting to develop a business plan. Answers to these questions may help you in developing a business plan. Let us see those questions. Questions to be addressed by the business plan to start a new enterprise. What problem do you want to convert into a business opportunity? What is the form of the solution, features of product or service? Does it require a technical know-how? How and from where to procure the technology? What shall be the cost of the technology? Who are the target customers? How to deliver the goods and services to the target customers? What is the market size? Who are the competitors? What competitive advantage does your business have? What are the risks and challenges associated with the business? What is the capital requirement and requirement of other resources? What are the business projected financial statements? And many more questions like this. You should have answers to these questions beforehand. This facilitates you to develop a sound business plan that can attract the stakeholders of the business and most importantly the investors. Now you need to do two things. First, build your plan and second, organize it. Many times entrepreneurs are perplexed regarding the order of the content. Although order of the content does not matter much, but it is important to sequence your business plan in a manner that there is a smooth flow of the information and it is easily understandable. Hence a much generalized business plan format or structure is often used with modifications as per the requirement. Given below is the format of a business plan. Structure for a business plan for a startup venture. Simple business plan cover page. Table of contents. Executive summary. Business description. Business environment analysis. SWOT analysis. Industry background. Competitor analysis. Market analysis. Marketing plan. Technical analysis. Operations plan. Management profile. Financial plan. Financial statements/projections. Summing up. Now let us discuss these one by one. Cover page has to be according to the nature and type of business. It should reflect the glimpse of the business plan. Table of content includes the structure and its sequencing with the page numbers. Executive summary should be written at last. It is usually a 1 or 2 page writing highlighting the important points which are made across the business plan. This should be written very carefully, as after reading this only the reader decides whether to read further or not. Business description is an overview of what the business is and what does it wants to do. It should include your vision and mission statement. Of all other things, it should also tell about the products and services that your company wants to deal in. Business environment analysis is done to study the environment in which your business is going to be established and run. This is also an important thing as it affects the existence and growth of the business. This environment only provides the business opportunity and poses threat to your business. SWOT analysis is about understanding the strengths, weaknesses, opportunities and threats. You need to carefully examine the opportunities and threats provided by the environment and match it with the strengths and weaknesses so that you can devise effective strategies. Industry background should be presented in the business plan, as your investor and other stakeholders might not know the industry so well. Hence, you need to make them aware of the industry under which your business enterprise falls. Market analysis tells about who are the target customers, what is the market size, which segment of market the business will cater, who are the competitors and the market, and how can your business have competitive advantage. A study of entire market is presented herewith. It should also project the marketing plan to capture the market and run the business operations successfully. Technical analysis describes about the location, land, plants, machineries and equipment, technology etc. What shall be the location of the business? From where are we going to procure the machineries and required technology? What shall be the cost of these? Etc. It describes the technical feasibility of the business. Financial analysis basically presents the cost-benefit analysis of the proposed business. It gives the projected financial statement, usually for 5 years, of the business and proves the financial viability and profitability of the business. This part is also one of the most important concerns of the investors. Summary is finally prepared to give a gist of the business plan, emphasizing the points that encourage and attract the investors to make investment in the business proposal. Detailed business plan outline at a glance. 1.0 Executive Summary. 1.1 Objectives. 1.2 Mission. 1.3 Keys to Success. 2.0 Company Summary. 2.1 Company Ownership. 2.2 Company History, for ongoing companies, or startup plan, for new companies. 2.3 Company Locations and Facilities. 3.0 Products and Services. 3.1 Product and Service Description. 3.2 Competitive Comparison. 3.3 Sales Literature. 3.4 Sourcing and Fulfillment. 3.5 Technology. 3.6 Future Products and Services. 4.0 Market Analysis Summary. 4.1 Market Segmentation. 4.2 Target Market Segment Strategy. 4.2.1 Market Needs. 4.2.2 Market Trends. 4.2.3 Market Growth. 4.3 Industry Analysis. 4.3.1 Industry Participants. 4.3.2 Distribution Patterns. 4.3.3 Competition and Buying Patterns. 4.3.4 Main Competitors. 5.0 Strategy and Implementation Summary. 5.1 Strategy Pyramids. 5.2 Value Proposition. 5.3 Competitive Edge. 5.4 Marketing Strategy. 5.4.1 Positioning Statements. 5.4.2 Pricing Strategy. 5.4.3 Promotion Strategy. 5.4.4 Distribution Patterns. 5.4.5 Marketing Programs. 5.5 Sales Strategy. 5.5.1 Sales Forecast. 5.5.2 Sales Programs. 5.6 Strategic Alliances. 5.7 Milestones. 6.0 Management Summary. 6.1 Organizational Structure. 6.2 Management Team. 6.3 Management Team Gaps. 6.4 Personnel Plan. 7.0 Financial Plan. 7.1 Important Assumptions. 7.2 Key Financial Indicators. 7.3 Break-even Analysis. 7.4 Projected Profit and Loss. 7.5 Projected Cash Flow. 7.6 Projected Balance Sheet. 7.7 Business Ratios. 7.8 Long-Term Plan. 8.0 Appendix. Besides all the components, it is also advisable that a business plan should include diagrammatic and graphic representations as well. Proper use of bar diagrams and pie charts make the plan attractive and understandable. Size of the business plan should be adequate, neither too long nor too short. Most importantly, frame your business plan according to the person or parties to whom it is to be presented. 22.4 Presenting the business plan to the investors. As discussed earlier, it is equally important to present the business plan effectively if you are looking for funds for the company from the investors. Anybody putting money in your business will be highly concerned about the returns on his or her investment. Unless the investor is confident about the business plan and of course the entrepreneur, he will not be willing to make investment. It is often said that even if the business plan have some lacuna, it can attract investments if it is presented to the investors properly. Hence, it becomes imperative to have a pitch and presentation that can showcase your promising business idea, your competence to ensure a better return on investment. Pitch here means an attempt to convince others that your business idea is promising and will fetch better returns to them. This is basically summing up the business plan. Presentation means telling your business plan verbally to your investors. Usually, entrepreneurs make presentation with the help of slideshow, PowerPoint presentation. You, as an entrepreneur, should give a hard copy of the business plan beforehand so that the investors can see data, if they feel, during presentation. It will help you also in making certain points clear to them. Finally, the presentation is followed by question-answer session. This entails that you should know your business plan well inside and out, backward and forward before presenting it to the investors. Given below are few tips for making effective business plan presentation. Business plan is a doorway to investors. If investors like your business plan, they may invite you to make presentation. Therefore, you cannot afford to be ill-informed about your business plan. Investors have hundreds of business plans sent by the entrepreneurs. They invite presentations from only few promising business plans. The basic objective of this presentation is to make the investors believe that your business proposal is worth the risk of investment. In a nutshell, you should do the following things. Decide about the kind of investors you want. Choose potential investors. They should be long-term partners and you should feel comfortable with them. Know your business plan well. Know your investors well. Know the requirements of the investors, high growth, high risk or low growth, low risk. Know how much funds should be requested from the investors. Show own investment first. The investors should be sure that you too are investing and hence your money is also on stake. Prepare your message well in advance. It should be quick, potent and condensed. Keep adequate time and slides for presentation, neither too much nor too less. Try not to read the presentation. Include more pictures and graphs. You should be specific and concise. Make a strong finish. Describe the benefits that you are offering to the investors. The most important thing during presentation is be yourself. You should not look what not you really are. Nowadays technology also helps in presenting your business plan. You can upload your presentations on internet. Many investors tend to review the internet business plan presentation as well. Check your progress too. 1. List out the broad components for creating any kind of business plan. 2. Discuss few tips for making effective business plan presentation. 3. Give meaning of the term pitch. 22.5. Let us sum up. A business plan is a roadmap for the business. A business plan is a written document that portrays how a business will be successful in obtaining their goals. A business plan is a document that exhibits that the proposed business has a promising market and it is financially viable and technically feasible. Business plan is not only prepared for setting up a new enterprise, it is sometimes prepared by the established business enterprises also if they wish to make a move to new direction. To plan your business plan, the first thing you should decide is the goals and objectives of your business idea. Setting objectives are important as it gives direction and motivation. Therefore, it is very important to set objectives if you are planning to start any new task. While setting objectives or goals, you should adequately satisfy the SMART principle. Business planning provides many benefits for your business venture. Business planning compels you to consider essential goals and policies and helps creating a conducive environment for starting a new enterprise. It also facilitates to anticipate the future. It is imperative to make a business plan as a budding entrepreneur or as an established entrepreneur intending to make new moves in the business. Still, there have been instances when entrepreneurs fail to prepare and develop business plans as a strong tool. There are certain barriers that discourage proper business planning. Lack of knowledge is the primary barrier, besides the cost incurred, fear of failure, short-sightedness, etc. Considering the efforts that are taken in developing a business plan, it becomes even more important to give a thoughtful consideration to structure it and present it in an effective professional manner. Adequate time and efforts should be dedicated to prepare it. It is very important to outline your business plan carefully after considering all the possible variables. It is often said that even if the business plan has some lacuna, it can attract investments if it is presented to the investors properly. Hence, it becomes imperative to have a pitch and presentation that can showcase your promising business idea, your competence to ensure a better return on investment. 22.6 Keywords. Stakeholders, all the persons or parties that can affect or be affected by the actions of the business as a whole. Business plan, set of documents prepared by a firm's management to summarize its operational and financial objectives for the near future and to show how they will be achieved. Pitch and means an attempt to convince others that your business idea presentation of is promising and will fetch better returns to them. This is business plan, basically summing up the business plan. Presentation means telling your business plan verbally to your investors. Investors, ones who put money in any business for return. Thank you for watching. We will see you in the next video with the next chapter.